Welcome to today's feature presentation, Trading the Frequency of Price Change. Price change is an underlying momentum where we can extrapolate with our algorithms when key price turning points occur, and we want to invite you into the launch of a new indicator that helps you to find those. What is the basis of your decision making in trading or investing? Many retail traders assume or guess. But we want to invite you today into the world of mechanical trading, where you trade at crucial price turning points with price thresholds. Buy above, sell below a certain price point, so that you can use conditional orders and OCO orders all the time. To help you finding those crucial points, we developed a new indicator that looks at the frequency of price change, and we show you what that can do for you. Let me briefly introduce myself. My name is Thomas Baumann. I'm your presenter today, and I want to make you aware of the risk in trading and that I'm here as a trader and educator, not as a broker, dealer or financial advisor. Let us jointly start with a little bit of background. Buyers and sellers move the market. Whoever has the upper hand moves the market in their direction, and our indicators specify those handover points. When we come to buy or sell, it is intertwined with what we know as bid and ask, and let us dive a little bit into the bid and ask price of an asset and what it means for you. Bid basically means the maximum price a buyer is willing to pay, and on the other hand, ask means the minimum price that a seller is willing to take. A transaction only comes into play if both sides can agree. There is a nice word for that, an equilibrium. That's the point where an agreement is found between the buy and the sell side, between bid and ask, and a transaction takes place. You best see a transaction happening in the time and sales report. You saw here, I worked a little late here on that presentation, 1:31 at night, and there you see sometimes on the uptick, it's green here, so two contracts got exchanged. Here on the downtick, red, we had multiple contracts exchanged, and there you see on which side we close. A trade or transaction occurs when a buyer is willing to pay the best offer available, or when a seller is willing to budge and sells at the highest bid. So this makes the transactions. Now let's dive deeper into the topic. What you see here is just a screenshot of the active trader, the DOM, where you see how many contracts were exchanged at that price in the past and where the current offer is between the bid and the ask. The offer on the bid and ask side of an asset is in constant motion, and so is the frequency of price equilibrium when an agreement is found, and with that we found a solid basis for extrapolating handover points where buyers hand over to sellers or sellers hand over to buyers. Let us carry out a little bit of background how we do the frequency measure of a price change, where our algorithm find that and define the speed and frequency, amplitude and frequency that contains the content for the signal that we build, and from there we extrapolate key identification points on a chart. It looks very simple. Here you have in gray dots connected down in our study. Okay, it's average, nothing special happens, but there's an impulse move, an impulse exchange. Something is happening, the start of a wave, and then we also measure a continued wave in these orange squares, and we add that all into a study, but also spell out price turning points by price thresholds. Let me give you a little bit of background information on frequency and signal theory. If you have a signal that you want to transmit and you want it to travel far and fast, you put a carrier wave on it, which is on a higher frequency, and that would be the resulting. This is exactly what happens, but you need a filter on the side of the recipient to understand where the signal was and how to decode it. And that's what we want to do. The transactions in a financial market are like a frequency modulated model, which you find in FM radio commonly, and we use that technique to decode by the underlying change what most likely is going to happen on key price turning points. In all never loss trading models, the SPU or speed unit builds an integral part. It is a statistical function which measures the statistical volatility of a price change, not implied volatility, that's in the option part. So the SPU determines then afterwards how far a price move most likely is gonna go, and how much wiggle room on the other hand we have to give to bring that price move to target. Here a quick definition of the level loss trading SPU. It measures and adjusts to actual the speed of the price, and with that we are able to extrapolate where things most likely going to happen. Why do I say most likely? We work with a probability. We're not 100% right, but we are with high probability, 65% and above. We can predict where price moves can go. On the basis of the rate or frequency of the SPU change, we find these key price handover points between buyers and sellers and spell out through our algorithm buy thresholds and sell thresholds. A crucial point considered in our price move model: we don't want to trade when others don't trade in our direction, and so with that we always spell out a certain range and then the price thresholds for entry, and we'll move in fast with the price move in the direction, and we move out at a specified direction, this here to the upside and also to the downside. And that means we only want to trade when the direction is confirmed by key market movers, which are usually institutions. How does it look on the chart? We built a lower study where you see these crucial price turning points and all the information that is contained. So you see here, for example, buy threshold, buy above 450.72. Yeah, here is a crucial point where you have an impact that was made, but afterwards basically the average price move continued on, and we'll see on the chart if it was carried out or not, if that threshold was confirmed, if it came to target. There you see also we have a slowing motion in the exchange. That's the red cloud on here. There the transactions go up and increase, and we have a crucial price turning point spelled out on this indicator: buy above 44, 48, 48, nice number, and here a sell threshold on the last candle that we considered in here. And you always see bar by bar how far a price move shall be. That's here in the SPU measure contained, which is always spelled out bar by bar on the chart for you. Our chart here shows the SPY, the ETF of the S&P 500 index, and you see how these combinations on the bottom and top come together. And we always offer that new indicator in combination with one of the NLT models or tradecolors.com, which you see here on the chart, or surely for users that already work with a level loss trading system. Yeah, so you saw here that price turning point here was true. However, it was not confirmed in the continuation of the next candle, and with that it didn't lead to a trade. Here we came to the next price turning point to the bottom, yeah, short, confirmed by the price movement of the next candle, and came to target. Same here on the upside, confirmed. Yeah, we know from our indicator how far a price move shall reach, and it came to target, and then afterwards turned to the downside. This one was again not confirmed here, so the price direction of that buy candle here was not ticked out by the last signal here. And then we have here on a chart the last observed bar, and I can tell you in the price continuation of the SPY that definitely was confirmed and came to target. So relative easy point of view, not so many trades. It works together with our other indicators, and it works as a standalone. This is a daily chart, and basically we consider two dimensions of trading. We consider distance of a SPU, and we consider time. The target shall be reached by candle number 5. If it's not, we close the trade regardless of where it is. Simple rule, isn't it? But two dimensions of trading: SPU for distance and 5 candles for time. Does the indicator also work on a lower time base? Absolutely. What you see here is a 30-minute chart for the ES, the E-mini S&P 500 futures contract, and you saw here critical price point for 6 points. It was good to move. Nice move to the downside. There was the sell threshold. It was confirmed in the continuation of the next candle, came to target, and we did it again on here, and it came to target and carried itself out to the goal that we had. Yeah, so very simple and easy. You read off the chart where your entry is. You put in a bracket order or an OCO order, and you know automatically by us teaching you where to put the stop, where to put your target, and the order is going to fulfill itself at one of those crucial points. By combining these new indicators with the existing systems of never loss trading, or here trade colors, you double up your chances. So you saw, for example, here crucial price point was indicated here by about 153.55. You see a chart of Apple, and we have a daily chart here that was not confirmed in the next candle, but with our 2 candle color combination we'll trade when the buy threshold of the second candle is taken out. That was the fact, and with that you didn't miss the boat. You were able to make the move to the upside, and the same here on the downside. The direct impact wasn't spelled out or ticked out by the price movement of the next candle, but the 2 candle color combination got you in a trade, and you were able to participate to the downside. And as you see, I took very recent models. That's Apple between 827 and 917 2021. Here we combine never loss trading trend catching and the new never loss trading SPU move indicator, and you see it allows you here, or allowed, for an early entry at that candle, not a late entry like in this. Then we carried it out for 5 bars and it came to target. That's what we want to achieve. And also here on the key price turning point, very early indication, so we can trade along and could even piggyback on that second order and make double the SPU move. So the indicator works in conjunction or together with existing indicators of never loss trading and as a standalone. Beginning of the year, we introduced the never loss trading timeless concept for swing trading, day trading, and longer term investing, and also it works in a very nice combination, confirming. Here you see key price turning points like with that floating signal here. The same to the downside. Here, there you see the stops are indicated by red crossbars, and here in the continuation we weren't taken out, but crucial price turning points are confirmed here 3 times, but also 2 times it allowed for an early entry into the price motion to the downside, and with that contributed extra income, making 1 SPU extra 2 out of 5 times makes a difference. It's like a 40% increase in the return rate and adds a nice additional profit to your existing indicators. We have an attractive year-end 2021 offer for you to be part of that new indicator. Yeah, so the indicator in itself is a $4,000 value. However, if you sign up for any of the never loss trading systems or tradecolors.com, it'll be added for free to your mentorship, and we'll spend time with you. Yeah, so we want to spend time with you 4 hours to 8 hours to 20 hours depending on the system you sign up, so that you learn how you can put everything in motion with our systems and with that new indicator combined. If you already use Trade Colors or never loss trading system, you are also invited, and we add that new indicator to you for half the price. So it will be $19.97, a one-time payment, and we'll train you for 1 hour of how to use it. And when you do it right, you'll have a very fast payback on this. When you consider, for example, as a day trader that will produce 3 to 4 opportunities a day at high probability, then you can pay yourself back quickly. When you are new to never loss trading, you will see in our mentorship we'll work on price move, entry, exit, stop, risk limiting strategy, maximum time in a trade. There's many crucial elements that we share with you in our mentorships in hours of working together. Everything will be recorded for you and sent to you individually so that you can relearn the learned and that you solve the model. Yeah, because there's 5 decision making bases in trading. Where's your entry, where's your target, how is risk reward short relating what time do I consider to get out of a trade and where do I place my stop to bring it to target. That all will be solved, and we share the mechanical rules with you that you can put into your trading plan and follow. In a quick motion, our training units contain details on the price move from the indication, how to limit your risks, where to find your trades, how to trade different accounts, also your 401k. We build together a business plan which contains a financial plan. What do you want to achieve? How often do you want to trade? And when do you trade? That's the action plan. What are your crucial price turning points where you accept the risk? How to manage your money, and in case you want to learn it, how to repair your trade. That gave us the name Never Stop Loss Trading, because we do trade repairs, but that's one special part of our teaching if it pertains to you. If that found your interest, call us either at the office, or even better, write us an email, contact@neverlosstrading.com, consulting, and we are happy to get together with you and find out what suits you best and how to make you part of mechanical rules, algorithmic high probability trading. A little bit of background: we are more than 10 years in the trading and education business. We made very many traders independent. Here again, contact@neverlosstrading.com, and we are happy to hearing back from you. Thank you very much for your attention, and we are looking forward to working with you. Bye bye.